Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Polestar Automotive, ticker symbol PSNY. And here we are looking at the weekly candles because I wanted to point out that it looks like this spinning top doji, or spinning top candle really, could be the sign that we are going to get a reversal, a bounce in the next week. However, this could also be the beginning of the formation of a bear flag. And so I just wanted to go over some levels that were significant on the way down previously that might be useful for where we're at currently. I'm just going to switch over to the daily candles so we can go over some of that analysis. And I do want to point out that Polestar closed on Friday, February 9th at a price of $1.72 at the same price that it closed at on the previous day. Even though it was a green candle, it was flat on the day relative to the previous day's close. And then we did see a little bit of movement in the after hours going up just over 1% at a price of $1.74. And so, yeah, I just want to be going over what we see here based on some drawings that I've done. A lot of them are Fibonacci retracements, but I've only included the key levels that I think should offer some guidance for us. But first, I'm just going to zoom out a little bit because this is going to be comparing our recent rise up and drop with the last rise up and drop. And so if we do look at that, we see that we did test the bottom of this wedge on, let's see, October 30th when we hit a low of $1.98. And then I did a retracement from there up to the top here at $2.65, which was the high on December 15th. And during that run-up, the 50% retracement is marked here at a price of $2.31.5. And that, you might notice, corresponds with the following run-up's top, hitting a high then on January 31st at a price of $2.32.9. So right around that 50% retracement level. So pretty interesting. And then if we do look at the retracement, the orange one on the way down, that goes down to the low of January 16th at a price of $1.59. And so from that retracement, we can see that the 618 level is at a price of $2.24.5. Also noting that it is lower than the white 50% retracement. And so both of those do kind of mark the following top that we just recently saw. So I think that's a pretty interesting thing to be paying attention to. And also do want to note that on the way down, that we hit a low of $1.59, just a couple cents above the 1618 retracement, or really extension, from this white retracement that you can see here. While I am not too excited about what that could mean, I do think it is important to consider that from this run-up, the 1618 extension was nearly hit. And so now, if we do look at this most recent run-up, we can see that on the way up, the 50% retracement was at a price of $1.96. Also coinciding with the psychological level of $2. And so it is quite possible that will be a top in the near future if this is a bear flag and if it is to break to the downside. And then so from the retracement to the downside, this green retracement here, the 618, noting that it is still above the 50% retracement, is at a price of $2.07. And so that could be a top for the next run-up as well. However, as I have pointed out, the previous 618 was below the 50% retracement, whereas now it is above the 50% retracement. So that does make me think that we could be going down, price could be going lower, and this could be the sign that we are forming a bear flag. And so if we do adjust the y-axis, we can see that the 1618 extension from this yellow retracement would bring price right around $1.13. So I do think it is quite possible price could drop that low and perhaps break below this falling wedge. That is a bear case scenario. I hope that does not happen. I hope that $1.59 here, this previous low, does act as support if we do break below the most recent low of $1.65. And one thing that I also do want to point out that I think is pretty interesting, if we take a measurement from the top here to the bottom here, that is right around a 30% move. And then if we take a measurement from here down to this line, that is again right around a 30% move if we were to come down to this 1618 extension. And I do want to point out that in between these two 30% drops, we do see some consolidation there, and we also did see some consolidation before, which was below the 50% and 618 retracement. And so right now we are below the 50% retracement. And if this does continue down, that could be reflected in what we're seeing here with this bear flag. But, I do think that there is some hope that this consolidation could lead to a breakout. And so I just want to go over that real quick. I'm just going to delete those boxes as well as this green retracement, just so it's a little bit cleaner. And so one little bit of hope, one guide that we might be able to use is if we connect the low here at $1.59 to the low here. Let's see, that's on February 5th, the low being $1.65. And so from that dashed line that we have there, we can see that it has acted as support with the touch point here and these wicks coming down to it. And so I do think that is a key level that we do want to hold above. And one level that we could note as being related to that is this purple line at $1.66, which has been the lowest close that we have seen with Polestar. And so what we do not want to see into next week is a close below that close of $1.66. And we also don't want to see closes below $1.65 or especially $1.59, putting in new lower closes at new all-time lows. That would be pretty bad, and that would suggest that we could be visiting $1.13. Ideally, we will respect this uptrending dashed line as well as $1.66, perhaps wicking below that but not closing below that level, and ideally starting to make higher closes, like closing above Friday's high of $1.76.3 or the open of February 8th, which was at a price of $1.82. So we really do want to see price getting up to that level, and that could also coincide with getting towards the top of this falling wedge to breaking out again, but this time not being a fake out, and hopefully getting back above $2 or $2.15 to fill the gap that was recently formed on the way down following the Volvo news. And so hopefully we can get above $2.15 and start making our way back up to this yellow line here at $2.50. And however, I will caution that it is quite possible that what we are seeing is the formation of a bear flag that could be breaking to the downside and potentially visiting the level of $1.13. So do keep that in mind. Ideally, we don't get any closes below $1.66, and we are able to break out and close above $1.82, making our way out of this wedge up to these higher levels. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.